Hey, Crypto Growth fam, how's it going? This is your host Shazib signing in. We're back with another video, guys. In this video, we will be discussing XSWAP Protocol, the rise of DeFi. It's going to be an interesting video, guys, so make sure to watch till the end. And folks, for those of you who are new to the channel, we primarily discuss utility coins and potential gems. So if you're interested in any of that stuff, then subscribe the channel and hit the notification icon for regular videos. And guys, you can also support the channel by becoming a Patreon, so do check that out as well, only if you're interested. Anyways, guys, let us begin first and foremost with the price and chart of XSWAP protocol at the time of the recording, guys. So guys, this is the all-time chart of XSP. The price is down 60.24% for the day. Sorry, for all time. If you look at the all-time chart, I wanted to show you the all-time chart first due to the recent fear in the market, to show you guys that we're still early in terms of the coins being undervalued, guys. Although they made some moves, some gains in the short term, but still we're extremely undervalued when it comes to these projects. BTC went to all-time highs, so this has basically created a buzz in the market that all coins should be reaching their all-time highs, but that hasn't been the case. Alt season will come, and in alt season, a lot of altcoin will be moving, and they will be moving money in a flash, in an instant. So yeah, guys, because if you look at the market cap of XSP, guys, it is only $4.75 million at the moment, although the volume has increased to 110% for the moment. It was 22,000 and now it is 44,000 something. If you look at the daily chart, guys, let me show you now. The daily, it fell down, went all the way to 0.007509, and then it is basically trying to come up, but it can even go down. We do not know, but still, I'm sharing with you the overall sentiment that at the moment the market is a bit bearish. In the last 7 days as well, it has fell, but it is still undervalued, is what I'm talking about. $4.75 million market cap is nothing for what it can deliver in the long run. Let us now look at the monthly. So yeah, this crucial support level over here, 0.0098, triple 0010. The zero was eaten, was broken basically. So yeah, if you look at the yearly chart, guys, now we're talking. These are some crucial support levels over here. I think the market might consolidate in this price range, but you never know. Anything can happen, obviously. But yeah. So yeah, if you look at the market, okay. So yeah. So why do I believe that XSP is undervalued? Let me show you some fundamentals and some news over here. So this is from Bell. She is a representative of XSWAP protocol. As the rise of DeFi and automated market makers continues to disrupt traditional financial markets, many banks are starting to take notice and explore ways to adapt to this new landscape. XSWAP protocol is an AMM DEX in XDC chain. We are ready. And we've talked about XDC Network and how it can grow and move trillions in the future if if it gains adoption, guys. It is disrupting global trade finance, tokenization in terms of trade documents, and all of that stuff, guys. Bills of lading, etc. So XSwap protocol being a DEX of a project that has the potential to basically move trillions. I mean, that can be huge for XSP in the long run. So let us look at this rise of decentralization. This from Giovanni Franzese, the rise of decentralized liquidity pools and how banks are catching up. First and foremost, guys, let me tell you guys, why would people use DeFi? As you guys know, that centralized exchanges have a lot of troubles. They've got hacked time and again. And check this out. Let me show you. Coinbase admits outage again as customers cannot buy and sell Bitcoin on the day it hits record high. Let me ask you a question, and I would like you guys to answer. Why do you invest in the first place? To sell? I mean, many, the ones who take profit, for profit taking, for profits. And when do you plan to sell your coins? when it hits all-time highs, right? So when it hit all-time high, if you're not able to sell or buy, I mean, what how secure is that platform, or how secure are decentralized exchanges in the first place then? I mean, in DeFi you own your coins, you can buy them or sell them whenever you want, and like they say in crypto, not your keys, not your crypto. So basically in decentralized finance, in DeFi, you own your private keys, you own the right to sell or buy whenever you like. So this is empowerment, financial empowerment in the of the highest order, guys. So check this out. Problems linked to heavy trading as Bitcoin surged to record high, then dipped. Company posted on X, we are aware that some users may be experiencing errors when transacting. Why are they experiencing this? I mean, this is the day that you guys, your portfolio is built for this day. This isn't good. I mean, this is unreliable service, and I mean, it is basically fraudulent activity. You might like to call it anything else, but this isn't cool. I mean, people are using your platform to buy and sell whenever they like. I mean, this is not good. This is ethically not good. So why is this rise of DeFi importance? Because in this aspect of stuff, in this wild west of the wild west, you guys basically have the power to do what you want. Liquidity pools, the dawn of a new era in finance, and how banks are reacting. This article is the first of a series on DeFi and its services. So let us skim through this. You guys can read this out yourselves. So there are a lot of things in DeFi that basically does not require third parties, like decentralized liquidity pools are a relatively new concept that has emerged with the growth of decentralized finance applications. In this model, liquidity is provided by a network of users who contribute their funds to a smart contract. The smart contract acts as a decentralized order book, allowing buyers and sellers to interact with each other and execute trades. Obviously, you guys already know that automatic market makers are a key feature of many decentralized liquidity pools, providing a mechanism for determining the price of assets based on supply and demand. We will explore the different types of AMM in an upcoming article, so you guys can check that out as well. Basically, there are no third parties involved, and there are a lot of benefits. You can you can gain passive income and all of that stuff. But yeah, it is risky as well in terms of impermanent loss. You guys can check this out as well. Another benefit of decentralized liquidity pools is that they can be cost effective than centralized pools, because there is no centralized exchange acting as a market maker. There are no fees to pay for access to the pool. Instead, users can simply contribute their funds to the pool and earn a share of the trading fees. Basically, when you give your money, if you're giving the funds to the pool, you can earn a share of the trading fees that are generated by the pool as well. And if you're providing liquidity, guys, if you're providing liquidity in these decentralized pools, for instance, in the pair of XDC and XSP XDC, I mean, there is a chance of impermanent loss. You guys can check that out as well. Users can contribute their funds to a sharing pool. The value of their assets can fluctuate based on the performance of the pool. If the pool performs poorly, users may experience losses. Even if the value of their assets has not declined, guys, even if your XSP and XDC network, basically XDC coin, it remains remains stable. Stable, or might I say that one goes up, the others goes down, and that sort of volatility happens, and your pool is not performing well, you will incur losses. So this is a bit a calculative move to take. Veterans take this, but you have to be extremely cautious when taking this move. But the main point is that people are now coming towards this new era of finance, which is DeFi. So banks are also getting involved as the rise of decentralized finance and automated market makers continues to disrupt traditional financial markets. Many banks are starting to take notice and explore ways to adapt to this new landscape. So check this out, guys. Which banks are being involved? So how they're reacting to it. JB Morgan, Chase, and Co. Chase is reportedly exploring the creation of a new division dedicated to crypto trading and custody services in response to the growth of DeFi and AMMs. Goldman Sachs recently announced plans to offer Bitcoin futures trading to its clients, as well as explore the creation of a Bitcoin exchange traded fund. ETF, guys, Bitcoin ETFs. You guys know that it has been the hot topic and a hot trend in the market. BNY Mellon, Bank of New York Mellon, recently announced plans to provide custody services for Bitcoin and other cryptocurrencies, as well as explore ways to integrate these assets into its traditional banking offerings. So, guys, in a nutshell, liquidity pools and DeFi automated market makers have the potential to be huge, guys. This is the pros are that the high degree of liquidity for traders, easy access to buy and sell assets, fast trade execution times, ability to offer features like margin trading, leverage, etc., regulatory compliance and oversight, especially in projects such as XSP and XDC, which are basically targeting the regulations sector and regulatory bodies, guys. This is huge. Cons, counterparty risk, as users are dependent on the exchange to execute their trades, reliance on a centralized entity to provide liquidity and facilitate trades, high fees and commissions, limited transparency around order book depth and market liquidity. So, this is the pros and cons of centralized liquidity pools, mind you. But guys, check out the decentralized liquidity pools. The pros: highly resistant to counterparty risk, low fees and commissions, open and transparent order books, high degree of interoperability, potentially more censorship resistant and permissionless. By the way, the centralized liquidity pools, like I told you guys, that they've got regulatory compliance and oversights. XSP being a decentralized liquidity pool and all of that, the project that it is basically built upon, XDC, is regulatory compliant. So that basically mitigates that risk with XSP, that, yeah, there is regulation involved, guys. So this is what I'm talking about. Uh, the cons are impermanent loss. A user can experience losses due to fluctuations, complexity, and potential user experience issues. Because there is no central party involved much, so people have to deal with their own issues most of the time. Potential for front ending and other forms of market manipulation, lack of regulatory compliance and oversight. But I told you guys that XSP might cover this side of stuff. Potential for scams and frauds within the ecosystem, that is also possible in centralized exchanges. So I mean, yeah, here you have your private keys. If you basically keep them secure, then I think you're good. Your keys, if you have your keys. So guys, XSP is basically becoming that front runner for XDC ecosystem in this regards in DeFi. So in this rise of DeFi, I think XSP can provide crucial role. It can give back to the crypto community as well, to the crypto industry as well. So in my opinion, it can be huge. By the way, you guys can hit the comment box below and let the community know of what you guys think about XSP. Anyways, guys, this was it for the video. If you liked it, make sure to like, share, comment, subscribe, and hit the notification icon if you're interested in utility coins and potential gems. And you can also support the channel by becoming a Patreon, so check that out as well. Like I always say in the end, until next time, stay blessed and stay tuned. Thank you very much, everyone.